Hello, everyone. Welcome to today's session. This is Jesse Webb. I'm going to be presenting today. Just want to make sure that you're able to hear my audio and see my screen. If you could just type into the question panel there and say, yep, we can hear you. And if I don't see any comments in there, more than likely you can't hear me anyway. So, okay. Okay, perfect. There's one comment in there. We're going to be doing a few, just a little bit of different format in the presentations. We're going to go through and they're going to be a little bit shorter so that we're not consuming so much of your afternoon, and we're going to be really focusing on, pardon me, the market conditions, a little bit more feature examples and some of the things we're utilizing in TradersPro just to really get you using the system effectively. And so what I'd like to do is go through and talk a little bit about, I'm not sure if you listen to my morning updates or not, but they'll be, I'm going to try not to regurgitate any of that, but we'll do just a real short update on market conditions. We'll take a look at what's moving, what sectors we're looking at, some possibilities in terms of what direction of the market, anticipation on pullbacks or trends, and then we'll look at some stocks. I also want to talk a little bit about portfolio management here because that's really one of the key functions really in any investment strategy is diversification and portfolio allocation. Wouldn't it be nice if we knew exactly which stock was going to be the one that has that big pop and has that big run? And we just never know. So we try and focus on groups of stocks to be able to have 6, 7, 8, 9, 10. One of the methodologies that I really like to use is called a muscle 10 strategy, or even a muscle 20 strategy, and that is and I'll get into that a little bit more towards the end of the session, but that'll kind of be our training topic for today. Let's talk about market conditions currently. We had a CPI number that the market liked this morning. It gapped higher. Looks like it's kind of trading back down a little bit right here. We're sitting right in the middle let me grab my drawing tool right here. Sitting right at the upper range of this rally. And so we just can't expect it to go straight up forever. It just doesn't work that way. So we've got to be able to deal with a retracement. Retracement is just simply a pullback. If we look at where we've been in this uptrend, and now we're towards the upper end of that range. So we've got in this bull market range is sitting at, we're sitting at 13.6. What that means is we're sitting at right up here. That represents that line. And in terms of the range, I've got the indicator set to 5. Traditionally, it moves, and maybe 6, 7, 8 traditionally has been the upper end of the range, but we've just had a huge amount of extreme volatility really in the last, since COVID. Markets have just been volatile, and they've been pretty extreme in both directions. So this definitely is capped out and topping out right here, and that means we're definitely due for a retracement. Trends just don't go straight up without a pause, a refresh, a pullback, whatever you want to call it, a counter trend. And so we'll spend some time going over that. Also, short-term indicators we're looking at just stuck in this range right here. We've had this pullback. We had momentum and breadth starting to top out and is now retraced. It's still looking relatively bullish. We'll look to see how things close today, but we'll look at that bar and that candlestick today because momentum is accelerating, and we're in this, I'll show the SPY chart, but momentum is now working itself towards the other end of this range. This middle range right here on this momentum chart is kind of a trendless zone. It just kind of is, it hasn't quite moved up into the buy range. It's obviously not extreme. It hasn't conditioned all the way back down to that sell side. And so that's where we're at. So this is really a cautionary location right here because we could go either way. We have support on this in terms of, I like to use this chart when we're talking about this middle of the road, because oftentimes in a nice uptrend, we get a pullback and it does find support right here. So we're sitting right at this support area. If we get underneath that, then oftentimes momentum will find resistance on that halfway point as well. So we're sitting right here. We're kind of at a critical area, but as I've mentioned in my morning videos, this is what it feels like. This is what a reversal starts to feel like. It's a slow process. Each day, each day we get just a little bit of a tick one direction or the other, and all of a sudden we're in a downtrend, or all of a sudden things are moving and we're moving in an uptrend. But it happens so slowly that sometimes it catches us a little bit off guard. And so we want to be able to recognize what's happening. Sentiment is still relatively high. It's up in this complacent range, which is fine, which means there's not a lot of risk in the market. Currently, I should say there's not a lot of perceived risk in the market. There's not this indicator. Sorry for that scrolling. I know sometimes it makes me dizzy when I'm rewatching these videos. It's kind of a long indicator there, but the upper end of this complacency range is based on volatility, and so when we have really low volatility in the market, this is complacent. There's not a lot of put buying. There's not a lot of fear. When it gets all the way to the other side, we have a lot of fear in the market, and that's when we look for reversals. So a big reversal will often happen when we do have extreme complacency up in these ranges. And this, as of right now, we're still seeing this to be relatively fine. And buy-sell ratios have moved to the bearish, just a little bit bearish tone. So we're getting, you can see that has crossed over. That buy-sell ratio is got a 0.62, which is less than 1. If we have an equal 1, then we have a buy. Then we're right at this crossover point. So bears are slightly in control right here. We know that. That's part of the reason why this indicator here, if I scroll into here, it says mildly bearish in a bull market. Okay, so the mildly bearish part is coming from these momentum indicators and the buy-sell ratio. The bull market piece of that is coming from a really long-term trend, which is this one. This is this 20-year S&P 500 chart, and you can see we try and catch these real long-term trends. We do get signals. Obviously, if this would have been a downtrend, it would have continued. But as trend and momentum traders, we're okay with flip-flopping. We go this direction. When it doesn't work, we flip back this direction. We've had quite a few of those. So we'll see if we end up with one. We would obviously have to have a pretty decent retracement for that to happen. And there's just still a lot of bullish tone in the market. If we look at SPY, okay, SPY, which is the ETF for S&P 500, we've got a pullback that's now working on this hold range. One of the things also that I like to look for is this coloring. If you got a mess of color like this, that's just an indecision. Okay, market is undecided, and you can see that's happening. Our prior trend, we had this green activity here. We had all this green activity here. That's the trending momentum part of the price pattern. But when we get stuck in this middle right here, then we end up with an indecision day or an indecision range, and often that can turn into more bearishness. It can stop and turn into this. What we want this to do is be our pause that gives us an opportunity to kind of really evaluate where our portfolios are sitting, and it gives us a chance to exit anything that's losers. I suggest tightening stops on winners and selling losers. We don't want to do it the other way around. We don't want to buy more losers and sell our winners. We want to keep what's working. So if there are things that are working, consider tightening stop losses on those. If you're up in an extreme range on some of those, then consider again tightening stops or taking some of the position off the table. If you're in losers, then if it wasn't predefined, and Jerry does a great job of explaining the stop loss locations. If you haven't got a stop loss in place and you have a loser that's getting out of control, make sure you whittle some of that away. We don't want losers. Typically a loser, a small loser will become a big loser. And so there's a term in trading that says your first loss is your best loss. Okay, meaning that your first stop is your best one. It might not be, it might stop out and then immediately rally, but it also might hit lower and then continue to trend lower if you didn't have a stop loss. So managing risk is always the most important part of any portfolio and any trading methodology. And it's easy to do. With brokerage accounts now, it's very simple to click a button on the screen and you can set up a stop loss and make sure that your risk is mitigated, at least for trading. Now with trading, because the TradersPro system is based on position type trading where we get signals, we get a buy signal that's gone from a hold to a buy typically about 4 times a year on most stocks. And that means it's gone from the sell downtrend to a pause to this hold to a confirmation green bar. That move from red to yellow to green on most stocks happens about 3 to 4 times a year. So that's about the time frame that we're looking for in most cases. It's a longer term position trade methodology. The advantage of that is it just kind of keeps our heads out of the game. So we're not looking at all of the little wiggles, from day to day. We're focused on longer term trends. We're allowing for that to happen. So S&P 500 stuck in that range. We'll see if they get this acceleration to the downside because we gapped higher. We rallied really hard, and now we're running into some resistance right here. And you can see that little tail bar that's starting to unwind just a little bit on that. So it's definitely warrants for some caution right here at these levels. We're seeing also indexes that have, one of the things I like to look at is the Dow and the buy, hold, sell setup of the Dow right here. So there's 9, the buy sell ratio is 1.5, 1.5, which means that you've got, and it's measuring this number, you have 9 buys and you have 6 sells. If I had 9 buys and 9 sells, obviously this would be 1. My buy sell ratio would be equal. It doesn't count anything in the hold range because they're just kind of they're kind of stuck in the middle. They're non-trending. So when we see a lot sitting here in the non-trending zone, kind of this hold range, then we're watching to see which ones are starting to shift. Do we start to get, are these numbers starting to get smaller and smaller and smaller? And in some of the cases it is. The transports we've got a lot of transports that had rallied, but now they're starting to move to the other side. Let's take a couple stocks examples here. So here's Delta Airlines, for example. So Delta, here's your trending move. Here in this entire range, it really didn't tick back to a hold for any more than a day here. It had 1 day back to a hold. It had 2 days back to a hold. And then once it got here, 3, 4, 5 days, and this is what I was talking about. Which way is it going to go? Is it going to give me confirmation back up, or is it going to start to move back down? This becomes an area where we've got to decide, okay, it's now back to red. We bought it down at the low. We're going to, we didn't use a trailing stop method. We just simply were waiting for a retracement pattern to see what happened, and we end up with a sell pattern or a sell signal right here. This, again, early indication of downtrend momentum. But that being said, it could very easily right here find some support, go back to hold, and find some support, and then give us a green bar. I call this right here the mess, the chop. Okay, we don't want to be a part of that as much as we possibly can. I'll see if I can find some additional examples, but for the most part, especially the red, we don't want to be a part of it. And the location of the market is important. If we're at the top of a trend, then we want to be aware of this with lightning. And again, the money management part is going to be up to you in terms of how you manage that. Whether you say I want out of the position entirely, or whether you say I want to just lighten my position. I really like Delta, so I want to hold on to it and see. That idea of holding on to it and seeing is one of the worst strategies there is, though, because it's not a strategy. Wait and see is not a strategy. If you're in a sell signal already, obviously, then you can say, okay, I want to wait and let it hold. It's bounced back up, but I'm now going to set a stop loss here, because if it blasts through that 44, there's a real good chance it's going to move lower. That's what stocks do. They ebb and flow. They go up and down. It's just the nature of what the market is doing. And all we can do is manage our position size and our risk, and have a methodology to what we're doing, a method to the madness, so to speak, right? So we're seeing indices that are starting to get weaker. That being said, there are always stocks that are going to be strong. Once this buy sell ratio on these indices start to really flip, then obviously we want to be out of the market or in something that is hedging our risk, an inverse ETF, which are also effective in managing portfolios. So market conditions, S&P 500 is really the one I like to look at the most, and we're sitting right at a little less than 1-to-1. S&P 100 is right at 1. So it makes sense that we're in that mildly bearish state, because there are groups of stocks that are starting to retrace and starting to head lower. Okay, let's jump over to portfolio management, because I want to talk about this in terms of one of the strategies to utilize, and that is this muscle 10 strategy here. Okay, so muscle 10 strategy is essentially owning a group of stocks. It doesn't have to be the muscle stocks, but it could be a group of stocks, and only owning that group of stocks in and 10. I say 10 because we're talking about 10 stocks. We're talking about holding 10 stocks all the time, or 20 or 15 or whatever the number is, so that we're relatively largely invested. In this case, I don't have that right now. I'm going to rebuild this portfolio. This is a portfolio I actually started in 2019 and have utilized it quite a bit. It's done pretty well since then, but I'm going to focus on it a little bit more as we focus more on these classes and some of the portfolio strategies, because that's one of the questions we get out quite often is, which stock should I buy, and how many stocks should I own, how big of a position should I take, when do I buy, when do I sell, right? Those are very common questions, and even in using a tool like TradersPro can create some confusion if you're not using a specific strategy. So I want to go through this strategy, and one of the ideas to present to you, and that is, let's use the Dow for example. Okay, well, now let's talk about the muscle 10, and that is on the muscle stocks tab, there are muscle stocks listed here. Okay, these muscle stocks are the strongest stocks in our database. And essentially this rank right here is calculating it calculates one full year of data, but the most recent quarter of data, most recent quarter of price activity is weighted by 40%. So almost half of the rank comes from the last 3 months of the price activity. So it's designed to be weighted towards what is currently the strongest, what's currently working the best. So when I'm looking through my stocks and I'm looking through my list, these are just some quick, easy, predefined scans. So I can say, I just want to go click on this button and see what's working. And there's a bunch of them, and there's a ton of them, and these stocks are high flyers, they're movers. Okay, those are the ones that we want to participate in. They are a lot more volatile, and there is a lot of risk associated with them. That is why we don't want to go in and just say, oh, I'm just going to buy the top one, or I'm going to buy the top two. Say, I'm going to buy the top four, but I'm only going to buy, I don't know, depending on the account size and the account balance size, you may say, if I have a $10,000 account, I may say, I'm going to buy the top 5 stocks, or let's say the top 10 stocks, but I'm only going to allocate $3,000 of my $10,000 towards those stocks. So you're not buying very many. It's going to be a relatively small allocation. People hate that sometimes because they're like, Jesse, I want it all and I want it now, right? Well, if in order to do that, there is no investing and trading is a zero-sum game, which means that for every winner, there's a loser. And so there's never a time where you can get a high reward and low risk. It's always high reward, high risk. If I want low risk, I get low reward. If I want medium risk, I get medium reward. So in terms of reward to risk and portfolio strategy and allocation, then again, remember, the only two things we can control are the position size and our stop losses, how we're managing that. So position size would be if I'm going 10 stocks, let's count those out, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. If I said, I'm gonna focus on these 10 stocks in the muscle stocks tab, okay, but I don't want to be fully invested. I don't want to invest my entire portfolio in those. I only want to invest 25% of my portfolio in that group of stocks. Okay, then I end up with a smaller position size. Maybe in a $10,000 account, maybe it's $500 a piece. 10 stocks, $500. That's 5,000. That's half my portfolio. Okay, so part of a trading plan with the portfolio management methodology, I'm not talking about day trading or that's an entirely different world. It's an entirely different game, and it's managed different. If I'm a day trader and I'm day trading Apple, I might put 50 grand into Apple, but I have a very, very small amount of risk. $500 at risk, $1,000 reward. I'm going to get stopped out, but if I might make that money in a few ticks. Okay, I'm not talking about that. I'm talking about longer term, but not super long term. I'm not saying we're going to buy this stock and hold it for the next 10 years, 5 years. We're going to buy a stock that's currently working until it stops working. And if once it stops working, we're going to replace it with something else from this list. So one of the ways to focus on that, let's look at this top stock. This one's a real humdinger right here because it keeps moving like crazy. Okay, and these are, again, they're high risk, high reward stocks because everybody's got their eyes on them now, and they float to the top of our scans because they are momentum stocks. They're moving, and you get a lot of firms, hedge funds, mutual funds, chat rooms, day traders that are looking for what is currently moving the best. Okay, now this stock obviously had a massive run from $3 to $10, and then it retraced all the way back to 6, and now it's all the way back to 14. Okay, that's why it's called a muscle stock. Muscle because it's strong. Okay, you think of a muscle car or a weightlifter or anything to do with muscle, and it's strong. And that's what these stocks are. They're strong. They're strong. They're the strongest stocks, at least in our database, and that we're tracking. So in this case, now obviously we know some rules here. When this upper end of this extreme, it has a buy signal here and here and here and here, but at some point we want to be aware of this. We don't necessarily, and we could certainly sell it if we had bought it once things get up into this extreme, because what happens is this is unsustainable. It's going to work its way back into this buy zone, and that becomes the sweet spot. That's the area that we want to look at. When we're trading momentum stocks, we can't trust our own instinct on what is high. How high is a stock? When you look at a chart, it kind of fakes us out because it's not the real truth. It's the price data, but there are things that we can think that it's high. And I have an example. In fact, let me see if I can find the stock. It is it this one? 1 year. Go 1 year. Okay, now if I'm looking at this stock, obviously it's been a really high flyer. But if I were to pull back just this price point right here, okay, and so if I were to look at this chart and I said, all right, it's gone from a buy to a up here, it's retraced. We got a new buy, some volatility here, a little whipsaw action. Remember that happens in momentum trading. Is we're looking for the continuation of the momentum move, and oftentimes when we get in this choppy sideways move, we get whipsaw. Whipsaw is we get a signal, we get stopped out. We get a signal, we get stopped out. Okay, that in most cases that's not it's not a real big deal, because in this case, we want to wait for a day or two. In this case, we had a red bar. The next day is the sell day. So if it popped back up to hold, I'd sit tight on it for a minute and wait and see. But if I were looking at this chart and I'm saying, this is too high because this is low, this is high. Well, am I right in that analysis? Well, as of this chart, yes, I am. But if I move this just another day, okay, then there's that black bar. Now, is that high? Yes. Is that high? Is this high? Is this high? It pulls back. Okay, you get up here, the momentum. If you look over to the left right here, and I'm dragging my mouse over momentum, it gets up to the 187 range. It's not super high, but it pulls back. Once I get a pullback, it's yellow. I'm waiting for another green. Okay, it pulls back, it pulls back. Here I get red. Now I get more upside, more upside, more upside, more upside, more upside, more upside. Okay, and now we're sitting right here. So when we're looking at charts and we're saying how high is high, that's why holding on to momentum stocks is a critical part of this, because it's hard to do. It's hard to look at a chart and say, well, this is high and this is high and this is high. I should be selling, I should be selling, I should be selling. In this case, if all I did was just follow the signals on this chart and it popped into my scan and I decided I'm just going to follow the signals on this chart and I back test that, this is going to show you what you would have done. Okay, there's volatility here. You would have been stopped out. The biggest drawdown would have been 20%. Now this is that time frame. Okay, right here. Yeah, I did 2 years, I think. Let's take a look. It goes back. Yeah, so that last 2 years. So you get drawdown, 4% loss, 6% loss, 10% winner, 10% winner, 1% loss, okay, 25%, 3% loss, 3%, and then bam, 91%. Okay, so there's even if I would have just followed those signals, I'm right half the time. My average winner is 22%, my average loser is 7%, and I'm up 100% on the trade. And I had a methodology of why I'm doing what I'm doing. Because in reality, would you have held on to this stock from here to here? Would you have held on to the stock? Would you have sold the stock here when it comes back down again? So following methodology is sometimes hard to do because we're like, gosh, I don't want to sell it. What if it goes higher? Or, you know, but you've got, unless you have another alternative, unless you're saying, okay, would you sell right here? Well, no, I don't want to sell because what if it pulls back and it finds some support right here and then ultimately heads back up again? Well, if you make all those decisions, yes, you've gone from here, sold here, but now you're repurchasing. So what if it would have dropped lower and now you're sitting in it and you're saying, gosh, I wish I would have sold back here. You're never going to get a scenario where you're thinking, I did this and I wish I would have done this. That's just it's a part of what happens so often. And so being able to focus on strong trending, uptrending stocks and holding on to them until they reverse. If you don't do that, this is what you miss out on. Okay. So trusting our own mindset sometimes of what is high, we'll miss out on some good opportunities. So the muscle stock group, even like TAST, okay, I was looking at it yesterday, and this 6-month chart, and you've got, you know, it started to trend here and then you had this bar and it was starting to break out. And yes, we can certainly use traditional technical analysis to learn and say, I know that this is a resistance area. If it breaks out of that, there's a high probability it's going higher. I'm not sure, there was probably an earnings report or something today that made it gap higher, but it started to trend here. Here's an example of that chop. Okay, I can use a hold signal if I prefer. You get a lot more reaction. Okay, so you could also use a range. You could say, here's a low, and I have a yellow bar or a yellow signal. In this case, you did get the first sell signal here, and then it reverses, and you're saying, okay, it immediately bounces, and now you get a green bar. Well, so what? Buy back into it, right? It's commissions and taxes and all that, obviously, or we're not talking about any of that, but I wouldn't ever let those things be a factor in your trading. If you're a long-term investor, then yes, you've got to consider that. If you're a trader, it's irrelevant because you're going to be dealing with short-term gains anyway, for the most part, if you're buying and selling less than a year. So obviously I'm not an accountant or a tax advisor. You need to talk to that individual and say, here's what I'm doing. Is it going to affect my taxes in a way that I'm not going to be happy with? But in terms of just flat out money management, I've got to try and avoid as much of this as I possibly can. I want to try and keep my eye on the green. Okay, when it starts to shift and pull back, and we know that it's had an uptrend, it's probably going to retrace, and then I want to come back and play again here. I'm not interested in playing here. Okay, even if I were to just draw this and block this out, okay, and you can say, I want green only. I want green only. I'm only focused on this stock when it's green and not extreme. Obviously, it gapped higher. Now I'd want to wait for it to pull back into this buy zone. So this buy zone becomes a really strong focal point. So TAST continuing to move. Now, if I want to, let's say that I'm buying these stocks, muscle stocks, when would it be a good time for me to go in and buy those? Early in the trend, or when it's not extreme, meaning when it goes from a hold to a buy is the best point, or when it's inside the buy zone. If it never gives you a yellow and it pulls and it's just continually green, then watch for a pullback right here where it pulls back into the buy zone. If I were to mouse over this and look at momentum, okay, yeah, that was still pretty high. This still was extreme. Anything above on this momentum, anything above 140 is in that extreme range. So it was 200, 200. So that momentum just kept going. Eventually it retraced, but here we are right now. So it's notorious for having high momentum. That may be one that it's like, all right, it's a strong moving momentum stock. I want to own some of those even though they're already moving high. The whole point, pardon me, the whole point is looking for stocks that are moving high, that are moving in the right direction. Granted, some of these will move high, they'll get really extreme, and then they will drop like a rock. So you have to be, certainly have to be cautious when stocks have had a massive move higher, like some of the ones that we've just looked at. But that's called the muscle 10 strategy. Rotating out, you can focus on these. One of the scans that I like to do is I have a scan that I call 95 to 100 buy, not extreme. Okay, so it's pulling in, oops, let me redo that. It's pulling in all the stocks that are strong stocks. They're in that range between 95 and 100, but they're not extreme. So if I were to click on this, I could say, okay, I have a buy range. It's got a high rank. This thing's got amazing fundamentals. Look at all that green. Annual EPS. Okay, it's an oil stock. What we know, oil is moving. Have I missed the boat on oil? Well, no, not yet. Yes, it's a long ways away from the last sell location here. Okay, once we get too far away from that location, our probabilities of a reversal are still high, but we're not extreme. We've got lots of good green. That's a good trending chart. That would be a stock I'd want to participate in, because what do I know, right? I don't know. I don't know. I'm not gonna spend the time looking at the income statements and balance sheets and try and figure out, I wonder if these guys are going to go higher or going lower. Because there's sometimes where the fundamentals look like complete garbage and the stock's still going higher. It's such a marketplace of buyers and sellers that you end up with too many data points for us to be able to analyze and say, yep, well, their cash flow looks like it's weakening, or this or that or the other, and so I'm not interested. One other thing I wanted to point out, though, a lot of users don't realize this report function right here. If you click on this report function, then this will actually take you out to this longer term report. Now you can see a little bit bigger perspective of this stock, and it also will go through and take a look at some of the historical moves. One of the four of the key components when we're talking about momentum stocks, or really companies as a whole, are return on equity. Okay, are they efficient with their capital? Are they doing it? Is management doing a good job? ROE is a good number for that. So we post that in here, 46%, and you can see it's climbing. ROE is climbing. So I've got a nice trend on ROE. That's good. Annual EPS grow year over year. You can see stair stepping higher. That, and it's currently, humongous, 1,000%. 30%, 20 to 30% is good. So when you see green here and it's trending higher, that's a trend. It's a trend until it stops being a trend, because that could continue to go as long as we have no idea, obviously, how long that starts to happen. Now, quarterly EPS. Quarterly EPS is the last 3 months. Has a stock's earnings per share been increasing or decreasing quarter by quarter? And you can see here we've got a pullback in quarter EPS. So it's something in this last year was the quarterly EPS was dropping. Let's see if that affected the chart pattern at all. Come up here. We did. Okay, so it had an earnings report. Quarter over quarter, it started to decline here. And the market is going to start looking forward. The other thing that's most important, one of the most important things, is quarterly sales growth. So you have earnings, but then you also have sales. Are they selling their stuff, or is their sales increasing or decreasing? It was also decreasing, but now this last earnings report, we've had a climb on sales. So now we're trending higher. Do I need to know any of this to be able to make a decision on a stock trade? I prefer no, because all I want to do is I want to see what the mass consensus is. That's what a stock price ultimately is it's the mass consensus of price activity. But who's making the decisions? Me and you, and Warren Buffett, and Ray Dalio, and all these hedge funds and pension funds and billion-dollar funds and billions of dollars that are being thrown at this. It's not my 50 shares that's going to move this thing. It's going to be Buffett and anybody else that has, large portfolios that are moving stock price. So ultimately the price is the main thing to focus on. But if you're really whittling down and saying, okay, I want a strong stock, but I also want to see that the company is relatively strong, these are some of the key points. There are other things that you could include, But then you start getting into analysis paralysis, right? There's a million things you could look at. We don't need a million things. We just need a handful of things to see if the company is working, it's in the right direction, stock price is moving in the right direction, we manage our risk, we've got position size that's allocated correctly, and then we let it go a little bit. Now on this report here as well, this also includes the trade statistics on the back test. So you could say, and the value of a back test, and I explain that down here, back testing a stock can provide investors critical statistical data. These results give you an informed perspective on how a stock trades within your chosen buying and selling method. Okay, TradersPro is a buying and selling method. It's looking for a very specific price pattern or a very specific momentum indication, and it's based on the buy and sell based on that. So inside of a system, it's like, does this stock work inside of this system? Because there's a lot of stocks that don't work inside of the system, and you may pull up a chart and you're like, I want to look at this stock, and it's like, whoa, that's horrendous. It's been in a large downtrend. Every single time it moves up and I get a buy signal, it reverses and heads lower. So I can look to see what is it working, and obviously if it's in an uptrend, it is working, and our anticipation is that that trend will continue to work, okay, until it stops working. That's the whole point, is let it continue to work until it stops working. And in this case, you had some nice winners: 81, 32, 7%, 36%, and then you have the graph, the overall graph, to show what 10,000 would have turned into just in this last year. So from 10, actually, I think we went a little bit longer. No, this is 12 months. It's only a 12-month time frame. It's had a big year, almost 300%, and that's just flat out the price movement. If I were to go from here to here, that's what this number is. It is the yearly return is 293. Okay. And I get some people that are like, well, why don't you could have made this. Yes, I could have if I bought here and I'm still holding, but mentally, emotionally, honestly, do you think I would have allowed myself to retrace and let this thing happen and be volatile? Maybe that's the kind of investor trader you are. And if you have that ability and that was your plan, I'm going to buy this stock, I'm going to hold it, then great. But it can work the opposite as well, where you could have been crushed. But let's see if you would have been using a system 293% going higher in this case versus 200%. So we didn't match just the raw buy and hold, but you had something that is allowing you to say, okay, I'm sticking to my guns, I'm sticking to my method here, because what if it falls off the table? What if it does drop lower and then I'm still holding it? Okay, we can't be that lucky unless you've got a portfolio that's diversified among 10, 15, 20 stocks, and anything that does continue to work, you're holding. Anything that's dropping lower, you're either, if it's a long term, maybe you're buying more. I hope you get my drift on that, and the value of looking at some historical data. Obviously, the phrase past performance is no indication of future performance, but it's just like history. Okay, history never repeats itself, but it rhymes. Okay, it rhymes, and that's what a stock past performance is doing. Is it's telling you how the characteristics of the stock, the characteristics of the trends, it may or may not continue to have those characteristics. And if that stops and if that doesn't happen, then we're going to start to see that showing up on the chart. We're going to get a sell signal. We're never going to get a new buy signal, so we don't have to worry about it. It just continues dropping, and we just don't have to play that game. We want to focus on what's working. Okay, so be aware of that. If you have a stock you want to do a little bit more research on, homework on, and remember that this buy zone is a zone. It's a range. And so even though we've had some ups and some downs, you don't have to have like exact fine-tune entry. It can be inside of a range, as long as your entry, and if it's brand new capital, I like to set a stop loss either at the low of the bar in this case, or if I get a new buy signal, at the low of the most recent hold signal. That's your new capital going in. If I've got $500 of my hard-earned money and I'm putting that money to work, I want to make sure it's protected. Okay, and so I don't want to just leave that open. Once you're in a winner, and then maybe you're adding more to the stock or various things like that, playing with the house's money, you can manage that slightly different. Let me jump back into one more example here on that muscle strategy, because I can do the same thing with a Dow. the Dow or the NASDAQ or the S&P. So let's say that it's NASDAQ 100. Okay, and I'm going to own the top 10 performing stocks at any given time, or the top 20 performing stocks at any given time of just the NASDAQ 100. Well, here's my scan and here's my group. Okay, I can do that with anything. I could create my own scans, and I've got a ton of them here that I like. Like, for example, this 555 I list, and here's my criteria. My criteria on this one is ROE. We just talked about it. ROE, annual EPS, last quarter EPS, sales growth are at least 5. Okay, at least. So I'm getting stocks that I know are moving, they're moving in that direction, or at least they're positive. It may have gone from 10 to 5 and dropping back the other direction, but now I can say, okay, of my portfolio, these are the only stocks I'm going to buy, and I'm going to own the top 10 or 20 of that buy list. And if one gets, like this one here, it looks like it's got it down, maybe weakening, may start to fall out, maybe I get a sell signal, I go in and I replace it. And how do I replace it? I pull up my screen, and tomorrow, if that did turn into a sell, and this rank dropped, it's going to drop down as well. So I can use this top 10 on anything, on any of the scan. You decide what criteria. If you want dividends included in that, I could say, okay, I want these, but I want even more. I want, I want these numbers at 20, 20, 20, and I want dividends. And I have some of those settings here, like 10, 10, 10, hold to buy, 20, 20, buy to hold. There's not going to be as many. Deere, actually, John Deere, this company has been cruising, but what it's scanned for is it's looking for, see, it's got ROE, 40s, 40s. It's a good looking, the fundamentals on this stock are amazing. So if I really want that kind of a company and that kind of a stock, then I can create a specific scan that I'm using. And then when I go back, when one of those stocks stops working or I get a sell signal on it, I replace it by another one of those stocks that's in that scan. There's obviously not very many right here, but let's see if there's any in the 10s. Okay, this one's a high flyer and it's been moving all year long. ELF. I've mentioned this in some of my other webinars where my daughter, she's 15. ELF is a cosmetic company and they sell mostly out of Target. Well, she follows TikTok, obviously, like all kids do. And there was an influencer that was promoting, she's like, hey, I got this really cool eyeliner from Target and it's this brand. She started telling me about that way back here. It was in January of last year. And I'm like, okay, I'm going to keep an eye on that. It had already been moving. It was already a well-moving stock. But look what it's done. It's gone up another 100%. It's crazy. But yes, you missed out on a few things. This sell signal would have driven us out, and then it had an earnings report. So it's not perfect. There's no system that is perfect, but it gets us in the right direction the vast majority of the time, and the right stocks the vast majority of the time. And that's what we want to be able to focus on is a key group of winners. Okay, I don't want to just go through and say, well, what about Apple? Because that's the only stock I know of, or Walmart, because that's the only stock I know of. You've got a tool here to be able to focus on and create essentially what exactly you want, and we're actually working on some machine learning features in here and with our scanners to be able to have that, and some AI features to be able to have that do the scanning for us. Which scan of all these scans is the absolute best and absolutely pulls the best ones out? That's in the works, and that's on its way. It's going to be super cool when we do have that. And that'll also help reduce some of the time. But even right now, just focusing on stocks that are moving higher and any other criteria that you want to be able to focus on. It's a portfolio strategy methodology. How do I buy it? When do I buy it? When do I sell it? And when do I replace the stock that I've got with a new one? Okay, and you can decide, even if it's muscle stocks or new buys. I wouldn't use the new buys because that's pulling in. All this is doing, one of the things you could do is say, I want to go look at the new buys each day and see if there's anything above 95 that's of interest to me, and that might also fit into my criteria that I could add into my portfolio. TK, like a shipping stock, for example, potential breakout right here. It's been trending higher. It's had a lot of volatility, but as it's moved, it's only a $6 stock and it's been trending higher and it could have a breakout, and it's got this buy zone. Fundamentals are decent minus some shorter term activity here. But once again, if I'm more focused on the price than I am the entire big picture, then I'm going to focus on price. If I prefer to say, oh, I'm really conservative, and this stock absolutely has to have increasing sales, and it absolutely has to have increasing whatever, I can create that scan here. Okay, and we're going to spend some time in a lot of these classes going forward talking about these scans, some of the ideas behind them, some of the settings as well, because I use them every single day, and I've got a lot of different variations of scans that I like to look for. Put selling, even this one right here, all green up, buy but not extreme. Okay, so what that means is all of these are all green, and all of their fundamentals are green. Okay, so everything is green, and they're large cap or mega cap, or they're really large companies. So let's look at some of the settings here. So I've got market cap is set to 2 billion, volume, PE is at least 1, and everything else is at least 1. Okay, if it's at least 1, it's going to be green. Okay, and I've got buy, I've got up, I've got up, I've got up. So these settings right here are basically creating a situation where everything is green on the scan, and and in this case, it hasn't had any kind of signals change. One of the things I can also do, remember, is I can set this momentum. Oh, I actually do have momentum. It's not extreme, set to max at 100. So here, all of these stocks, none of these are going to be extreme unless they've gapped on me today. Okay, let's go into the 6-month chart. So here, CLS, it's had a big rally, but it's actually pulled back enough that now I may be watching for a confirmation bar. I can also add a fib level in here and say, okay, maybe it's retracing back to a 38236 or 382 level of support, and I can just really maximize my time and really maximize the tool to be able to find exactly what I want. But then remember, I need some diversification among stocks. I don't need diversification among asset classes, or although you can, that's going to be in your 50-50 split or your 60-40 split. If I said I'm going to use a muscle 10 strategy, but only 40% of my portfolio, or only, whatever that number turns out to be based on my own risk tolerance, then I'm able to manage that portfolio a little bit more effectively. So those are some of the things I'm going to present in the classes going forward, and being able to utilize the tool, because it's kind of fun. It is fun. Obviously, it's more fun when we're making money, and bull markets, these momentum stocks just keep going and going and going. So I really want to focus on which ones are working, which ones are there, and then when's the best time to be buying that. UIHC right here is not it's a good stock, but as of right now, it's too far up. The momentum is too high. If I were to buy that tomorrow, which I could, it could go higher, but it's going to pull back into the buy zone at some point. I've got to be patient. I've got to wait for that to happen. If it's had a massive run or a huge gap, give it a little bit of time, put it on a watch list, and then let it pull back a little bit from there. So you've got your upper and lower ranges, you've got your sweet spot, you've got ways to be able to look at fundamentals if you prefer. For me, fundamentals is just a scanning mechanism. It's a way for me to sort out stocks that I know the companies are at least quality companies and they're moving in the right direction. Because bottom line is, ultimately, a stock's price is the present value of the future earnings of the company. Okay, that's what a stock price is. But it's everyone, the market is deciding what that looks like at the same time. So long term, ultimately the company has to perform. It's the Warren Buffett style. Warren Buffett doesn't buy stocks, he buys companies. And so he's like, I don't care what the stock price is doing, because is the company growing and increasing, and because he's going to hold it, he holds them forever, right? And so those are the fundamentals of the company. I can say, all right, I at least want stocks that have a positive PE. Everything else I don't care about. And then you can start whittling down from there and really fine tuning some strategies that allow you to really find some good looking stocks. Cisco, John Deere, Baker Hughes. Had this little gap out, a little bit of a pullback right here, but in an overall uptrend. So some of those I can move through, and I can decide, and I can tighten up that scan for it to be effective for me. I'm going to end on that note. If you run into questions throughout the week, feel free to either email me or feel free to bring those questions to these classes, and we can hash them out. Or if you've got a question you want me to cover in the class, feel free to send those questions to me, and we can talk about them, because I really want these presentations to be instructional in terms of what we're looking at, market conditions, and which stocks are interesting, and then also some strategy. How do we manage the portfolios? What's a good number of stocks? How should I be buying and selling? What's my allocation? The two most important part are position size and risk management, whether you're using a stop loss or whether you're using the sell signal. As long as you've got a selling risk management strategy, you're going to do fine, and you're going to catch some winners, because some of these may take off and rocket, and that's what we're expecting, and that's what we're hoping, is to have 1 or 2 or 3 or 4 of these muscle stocks in our portfolios just go nuts, go hog wild to the upside and surprise us. But along with that 1 or 2 that really rock higher, we're going to have 1 or 2 or 3 that stop us out, or that don't perform. All we need is just a handful of stocks that do much better and have some really big returns, and that'll take care of any of the stops and losses that we have. So we want to make sure we're mitigating our losses very, very quickly, and then letting our winners run. I'm going to end on that note. I sure appreciate all your time and effort. The recordings, I'm going to keep posting back up onto YouTube, but also in the Learning Center. And as soon as I get that processed, I'll have those posted. And if you one easy way is out on the YouTube channel. If you go out and just click on that like button or the subscribe thing. I'm not a big YouTuber, but we're trying to build out that YouTube channel a little bit more, and so I'm trying to figure that out. But it's that'll also let you know, you can be alerted when one of the recordings is posted there. So we'll see you next week. Thanks a lot. Bye now.